Hi everyone, I thought I'd pop on today and talk to you a bit more about bridging. I know I spoke to you last week about different ways to structure your bridging loan and how to maximise the amount that you can borrow. But I thought I'd follow that up with some more information around how to compare bridging quotes and how to decide who to go to. Now, as you know, we do lots of bridging and we are super fussy about the types of lenders that we work with, and my sort of top sort of criteria, if you like, about who I decide who to work with, and this really comes with experience, is who delivers on what they say that they're going to do. So for example, if they give me terms at a particular rate, at a particular loan to value on day one, do we on the whole complete on that? Now I appreciate sometimes valuations will come in there might be a problem, but on the whole, the lenders that we work with will have a 75% product, for example, or an 85 or 65, and that's what they will complete on. So that's really important. And the other thing is how they deal with post-completion issues. So if your build takes longer than expected, if there's some sort of delay with planning or whatever it might be, you may think, oh, that won't happen to me, but trust me, I've had plenty of experienced investors have problems, particularly over the last year or so. How do they then deal with an extension that is required? So I want lenders who are not going to increase your interest rate past that period, whether that's in a 12-month period or what have you. I want lenders that will be happy to extend that. So there's going to be some terms in with that, but are happy on the whole to extend that loan, and that are going to treat you with respect, and aren't going to put your loan in default and cause you ongoing problems. So that's really important. A lot of lenders will up the interest rate by 3%, I've seen, by 5%, literally immediately the day after you go over the terms and there's no extension option. So look at that. They're the two things that is really important to me. I don't mind a lender that's not, particularly punchy on the interest rate to start with, as long as I know that that's going to be, the amount that we look at for the whole term. So other things to look at is how do they charge you interest. So most reputable bridging companies will charge you a daily rate of interest. Some will charge you monthly. So what's the difference? So say for example you complete on your bridge on the 14th of the month. If you then would want to redeem your loan, so say you redeem your loan on the 13th of a month, or however many months later, you will have used almost all of pretty much your whole monthly interest at that point. So if you say you aim to complete on the 13th, and then that goes over by 2 days, if it's a daily rate of interest, you will literally be charged those 2 days interest. If it's monthly, then you'll go over the month anniversary and then you'll be charged a whole month more interest, which could be quite a considerable sum. So just bear that in mind. Look out for additional costs. So often there'll be like admin fees, commitment fees. Look out for the cost of monitoring surveyors or QS if you're having drawdowns. Just look at all the fees around it that aren't necessarily advertised on day one. Look at how you're happy to pay your interest. So some people will want to service their interest, which means that you pay that monthly. The advantage of that is that it will give you a higher day one loan, and if you've got funds, if you've got surplus income each month coming in, then you may want to do that in order to help your cash flow. Some lenders won't allow you to do that, so just check. Some lenders will allow you to do a combination of the two, so retain for a period of time and then service it afterwards. And that's quite often what we will look to do for our clients. It gives you a nice balance of not having to worry about paying it for a couple of months whilst you're doing a refurb, but then also helping your cash flow so you're not retaining the full 12 months. But again, a lot of lenders won't let you do that. So have a look at that. Have a look at, is there an exit fee on there? The lenders that we work with generally don't have an exit fee. If we do have an exit fee, then I'll be wanting either like a reduction in interest rate or some sort of balance across that. Maybe you want the exit fee if you think that there's a huge profit in there, but you want some sort of balance for that, not just the standalone exit fee. Also have a look at a minimum term. Some lenders will have a minimum term. Quite often we see it's 3 months, which is not really an issue. I can't imagine that you're going to be coming off that bridge for less than 3 months, but just watch out for that if you think you are going to flip it quickly. And that's it, I think. The last thing, really important thing, is the way that we work, and I've mentioned this a number of times before, is that we'll look at the end product. Where are you trying to get to in terms of your term mortgage after your bridge, and then work back from that. Now, if what we can do is use the same lender for the bridge as we intend to use for the term, then that will reduce your legal fees. It may reduce your valuation fee, because we can get a re-inspection rather than a full valuation on the exit, and there may be a discount on the arrangement fees as well. So depends on what lender we go to as to how much the discounts are really and how they work. Some lenders have a better proposition than others, but on the whole, if we can try and use the same lender, it will give us some advantages as the process goes forward. So on the whole, we try not to use standalone bridging companies unless we need it for speed or if you want the refurb costs. On the whole, otherwise we'll try and use a bank. They definitely say what they're going to do and do it more than standalone bridging companies. They have a reputation, like a bigger reputation within the market, so that's something that they need to do. And also you'll work off a fee scale for valuations and legal costs, which means that will be considerably lower. Standalone bridging companies, particularly smaller ones, will just go out to tender basically and say to the legal team, how much you're going to quote for this, because it's bridging. Because they tend to push a lot of the underwriting to the solicitors. They don't do a huge amount of underwriting within the lender. A lot of the due diligence is pushed out to the solicitors, so there's a huge amount more work for them to do, and they price accordingly. So it's often cheaper legals to go with a bank who are going to do more of the underwriting process themselves. Hope that's useful. And it's another long one. I do really try and do shorter videos, but I'm not very good at them. But I hope that's useful, and obviously give me a call if you've got any questions.